We're gonna start with the minute now. Three, two, one.
How many people inside? Not people.
The number one obstacle that will prevent me from investing is my bad past experience. I was scammed before, so I really am traumatized about it.
I'm more concerned about the losses that I may incur without proper knowledge.
So some of my friends and family has actually lost a lot of money in investments, and that was probably like the biggest obstacle that I have to overcome in order to make my first
think the
move
problem
into
is
putting
Zoom
real
can
money
come to
into
waiting
an
room.
investment.
To be honest, I made some errors in the past in stock investment as well. I just put in money without knowing. After attending the VIA course, that was the most important turning point for stocks. Yeah, after that, the portfolio just went up and up.
I decided to source for a reliable training, and I found VIA. I took up the course and I learned that, okay, there is another side of investing, that we can do this very rationally.
I remember I did not fully comprehend the concept then. In the end, I attended VIA because Hayden's life experiences and achievements were convincing.
Wow, investing has improved my life, especially the unusual strategy, the cash flow option strategy that Hayden taught us. And plus, we know how to scan and screen for good and cheap companies. So I've been earning premium since last year, so it's been 1.5 years. So I have very regular passive income, and it really improved my life because I have a hope of an early retirement and giving more to my family.
So investing has definitely changed and improved my life by giving me back my time freedom. So a lot of people think that investment is about money, making money, but no, it's actually not. It's about what money can do for you, and the number one thing that it has helped me is that it has brought me back my time freedom. So right now I'm semi-retired. I get to spend a lot of time with my family, kids, and friends as well. And of course, I can go travel anytime I like because I don't have to worry about my finances.
By investing in right companies or stocks or whatever, I give a better chance to myself, my family, my children, a better starting line. You know, in the future, they have more resources. They can do whatever they want to do.
I think what really put me to VIA was Kaden. I attended his masterclass. I heard
Yeah, can you check? Now the check off my one. So you just see the YouTube.
And you refresh, turn off your video and then join me again.
Say again, huh? Over, ready? Ready, go. Right.
Oh, that's what I can do it. I think you wait for the agenda to come in. Yeah, I would like to.
The number one obstacle that will prevent me from investing is my bad past experience.
But next time, shouldn't we start
I was
first?
scammed before,
Let the attendee
so
join.
I really am traumatized about it.
I'm more concerned about the losses that I may incur without proper knowledge.
So some of my friends and family has actually lost.
So wait, maybe until 7:30 to say the video. Yeah. Okay. So you stop.
You wait for 7:30.
Huh? Wait. No, wait for 7:30 is quite funny, right? Let me share screen. Okay, I'm sharing my PowerPoint right now.
Okay, thank you.
Testing. Can the participant hear me or the participant cannot hear me?
I can hear you.
To be a participant and see 30 seconds.
Okay. Okay, then I'm Kilama, Sana. Okay. Really?
Then you all just adjust or you adjust.
Yes, right.
The number one obstacle that will prevent me from investing is my bad past experience. I was scammed before, so I really am traumatized about it.
I'm more concerned about the losses that I may incur without proper knowledge.
So some of my friends and family has actually lost a lot of money in investments, and that was probably like the biggest obstacle that I have to overcome in order to make my first move into putting real money into an investment.
To be honest, I made some errors in the past in stock investment as well. I just put in money without knowing. After attending the VIA course, that was the most important turning point for stocks. Yeah, after that, the portfolio just went up and up.
I decided to source for a reliable training, and I found VIA. I took up the course and I learned that, okay, there is another side of investing that we can do this very rationally.
I remember I did not fully comprehend the concept then. In the end, I attended VIA because Caden's life experiences and achievements were convincing.
Wow, investing has improved my life, especially the unusual strategy, the cash flow option strategy that Caden taught us. And plus, we know how to scan and screen for good and cheap companies. So I've been earning premium since last year, so it's been 1.5 years. So I have very regular passive income, and it really improved my life because I have a hope of an early retirement and giving more to my family.
So investing has definitely changed and improved my life by giving me back my time freedom. So a lot of people think that investment is about money, making money, but no, it's actually not. It's about what money can do for you, and the number one thing that it has helped me is that it has brought me back my time freedom. So right now I'm semi-retired. I get to spend a lot of time with my family, kids, and friends as well. And of course, I can go travel anytime I like because I don't have to worry about my finances.
By investing in right companies or stocks or whatever, I give a better chance to myself, my family, my children, a better starting line. You know, in the future, they have more resources. They can do whatever they want to do.
I think what really put me to VIA was Caden. I attended his masterclass, I heard him speak, and I've heard other speakers speak for their own masterclasses. And Caden's humility and honesty was obvious. That this guy is not out there to get you to sign up. He's just there to show what he knows and let you learn about investing his way. So I found his honesty really, really enticing.
Well, I've heard other value investing presentations so far, and I found that Caden to be very sincere, knowledgeable, and I believe that he is teaching in a way where he is through his honest opinion and experience. So I think that is very useful coming from somebody who's you are trying to learn from. That's why I decided to go with Caden and VIA.
If you want to be financially free, learn from people who have the means. If you want to be rich, learn from the rich. Only those people can teach you these things. So I came to VIA searching for a mentor, and I think Caden is actually quite a perfect one because he gave us a mindset. And that was the most precious thing, a habit that he gave us for investing.
So in terms of investment results, in terms of ROI, is about 10 to 15% per annum.
1.5 years, I doubled my savings.
I have been investing for 3 years now, and proud to say that one of the stocks that I own is now a two-bagger. And a two-bagger means it has gained 200%, so I'm quite proud of that.
Since I started in October, November period, and by now it's about almost a year already, and I got about 29% of ROI, and I think that's fantastic considering the fixed deposit interest in Singapore. Thank you.
Hi, this is Karen from VIA Value Investing Academy. So before I start, thanks for joining today's live webinar for our US case study called Paute Group. But before that, let me just make sure that I share screen so they can see that everything is okay. Let me put it to the full screen mode. Here, hang on there. Okay, you should be able to see the full screen mode, right? Very good. So let's get started. So again, thanks for setting your precious and hours time to watch our US case study. But before we start, let me share with you the context. Now, the context is actually pretty simple because a couple of months ago, we started our TikTok channel by this URL at Caden Chang Investing. Everything is all small cap, and we have published quite a number of videos. And we realized that for almost every video regarding a case study, there's always comments that look something like this. For example, hi Caden Koko, can you name some stocks to buy and hold until 2065? And some other comments look something like this. Can you also do SIA, which stands for Singapore Airline, in the next episode? How about Singtel stock? So most of the comments is asking about, hey, can you please do company A? Can you please do company B, and so on? So you can see here, what do you think about Citron? What do you think about Keppel? So predominantly, they just want to ask me for my thoughts. So by looking at the question, actually, I think I'm quite happy in the sense that, they seems to think that I know everything. Yeah. Now, but what's more worrying is about other comments. For example, this one by this gentleman, I suppose. He said something like, please do one on Samtrade. Samtrade, in fact, is a private company, so I don't really have the financials. So he says that a lot of people kena. Kena is a dialect, right? That means a lot of people lost money. So 2 years later, right now, they cannot get their money back. I think comments like this are more worrisome rather than just asking about this company and so on. And then there's another one. Can you please do a video on SPCE? Now, SPCE is a ticker for this company called Virgin Galactic, which is listed on New York Stock Exchange. And then he say, I'm stuck with this stock. And of course, this emoticon with scolding vulgarities. So these are the comments. These are not just the only two. We have seen many. There's a bit worrying. Yeah. And because I'm pretty worried that people actually buy something without really understanding, which is why one of the primary purpose is really to run a webinar like this to introduce the framework of how we really invest. So remember, the biggest problem, at least we observe, is most people don't really understand the company that they're investing, such as Virgin Galactic and so on. So in the end, what happened is they ended up losing money. But this is the biggest problem. There are also other associated problems, right? For example, if they want to invest in something, do they know where to search for opportunities? Now, for example, if you want to buy a laptop, where's the best place to buy a laptop? If I want to buy a fridge, where is the best place? So these are the things that's a bit easier versus trying to look for investing opportunities. Yeah. So now another challenge is most people have no idea how to evaluate whether a company is good or bad, which is why they comment at our TikTok channel. And then even if they know something is good, like for example, our local company called DBS Holdings, you can still lose money by buying a good company if you buy at the wrong price, because if you buy the wrong price, you could turn a good investment into a bad investment decision. And then at the end of the day, you cannot put all your money into one company. For example, on TikTok, recently we published a video about a local influencer. His name is called Stephen Lim Koko. He show hand all his HDB proceeds, which is close to 300K, into one single company called SingPost. But he's really generous in sharing, because recently he posted, he made a post that said he cut loss and then lost about 120 over 1,000. Yeah, so I think it's really kind of him to share something so private. Yeah, so at the end of the day, once we realize the problem, we as VIA, we wanted to see, is there any way we could help you? Yeah, so how can we help you via this hour webinar? So the first thing is, the challenge is where to search for opportunities. We have already found one company for you, which is Paute Group. And then we'll set out the framework, the list of criteria, how all of you can learn to see whether it's a company good or bad, so that at the end of the day, you minimize mistake and you won't lose money. And of course, at the end of the day, even if it's a good company, you must identify when is the entry point, exit point. Not so easy. And of course, eventually to build a portfolio. Now, whatever that we're covering in this hour webinar is all riding on a methodology that's been proven and is known as value investing. And I really want to give credit to the late Professor Benjamin Graham, who has created this formula since 1920s. And of course, not many people know about Benjamin Graham. But the fortunate thing, right, is this value investing has been popularized by one of the richest men in the world, and his name is called Warren Buffett, who is also known as the Oracle of Omaha. And his net worth is more than 120 billion. That's a lot of money, right? Yeah, and he's also the CEO of Berkshire Hathaway. But unfortunately, I think some time ago, his good friend called Charlie Munger, who is also the vice president of Berkshire Hathaway, has passed away. Yeah, but they have been investing since day one. So I mean, from my perspective, is investing is really a very good, important, high-income skill, right? Because it uses our brain. So in other words, even when we grow old, our hands and legs are not functioning very well, we can still make good money, provided we have the knowledge. Now, so since we are using the framework called value investing, what is our own internal framework? So I do not mind sharing with you, within VIA or Value Investing Academy itself, inside we have a VIA Value Investing Framework, and we call it SEGA, S-E-G-A. Now, where S stands for search, there's always a searching process, and there's many ways to search for a good business. And one good way is really to use a screener. Yeah. Then the next way is once we have screened some potential companies, it doesn't guarantee that they're always good. We always have to evaluate to determine if they're good or bad. So there are only two categories of companies that we're searching for. The first category is we're searching for companies that are good and grows, so that when a company grows, the share price that we put in, it really grows. And of course, we want to buy it cheap. Yeah. And this is the first type of company. If we cannot find the first type of company, we'll go for the second type of company, which is we want a company to be good. Maybe it doesn't really grow, pretty stagnant, but it's still cheap. Yeah. So we want to evaluate, and of course, we want to stay away from bad businesses. So then the third step, G, right, stands for gauge. We want to use certain valuation framework to estimate the company's intrinsic value so that we can buy below its intrinsic value and sell above it. Then at the end of the day, we want to build an asset portfolio. No, it's like a small empire of businesses that will pay us, and then one day when we grow old, the money that is being generated from this business will free us. And one of the key reasons why we want to invest, of course, for example, if you want to invest in NVIDIA and so on, yeah, we want the CEO who is capable to run the business, because we can never run the business as good as him. So this is the framework that is very important. So remember, investing requires knowledge and a proven framework. So a very quick story about this company called Paute Group. If you look at this screenshot over here, this is the company's return for the past 2 years, which is 144%. And this is the return of Paute Group for the past 5 years, right, which is 328%. So before I carry on, I just want to let you know that if you walk down the street and then you randomly ask any 100 people, do you know Paute Group? I don't think anybody knows. But if you ask about NVIDIA, Microsoft, Meta, I think most people will know. And the reason why we want to choose this group is because if the company is not so well known, there's usually a greater opportunity for people like me and you as retail investors to have fast gain. Yeah. But if you invest in a company that most people know, maybe the char kway teow uncle also know, or maybe the hairdresser also know, then most likely the company, okay, even though it's good, but it may be overpriced. And then when you buy it, you may realize the share price drop, then you end up losing money. Okay, so it's important for us to understand that we don't have to buy a company that everybody know. Yeah, because tend to be overpriced. But we can invest in a good business where probably not many people know. By the way, I do not mind sharing with you that I personally bought Paute Group quite a couple of years ago, and I'm still holding it today. Yeah, unless something happens badly, right, into the future. So before we start, let me just share some disclaimer, which is quite important. Now, the purpose of today's case study, which is Paute Group, remember, is solely to illustrate the application of value investing, Benjamin Graham's method, and various valuation methods in the context of real-life company Paute Group, for continued learning of value investment method and investor education. So remember, this is very important, right? Under no circumstances does any of the information shared today represent a recommendation to buy, sell, or hold any stocks. Yeah. The illustration in this case study demonstrates the general application of value investing principles and do not take into account every single one of you, your characteristic, profile, or risk appetite for any given investor. So remember, in no event shall VIA or me be liable to any of you, guests or third party, for any damages of any kind arising out of the use of any content shared here. So I'm just going to skip a bit, right? So remember, the information provided in this document, which is this webinar, is meant for purely education purpose and is in no instance to be regarded as investment advice. Okay, let me see. I think that's more about it. But a quick one just to let you know that VIA or myself, we are not licensed by MAS. So our job is really to educate, so that all of you know how to fish, rather than we fish for you. Okay, so in order for us to invest, remember knowledge is quite important, because if you do not have any knowledge and then you invest, you end up losing money. So let me just share with you the framework that I use riding on value investing, and you see whether does it make sense. So even though the label is called table of contents, but in fact it's the framework. So step one, right, in order for us to invest, we have to know what the company is all about. So for example, if you want to buy a laptop, let's say, I'm quite sure you need to identify what are your needs, go to the shop, and then look at all the criteria, all the laptops, and see whether does it fit your needs. So you have to know what are the stuff that you're buying. Then the next one, right, is if you're investing in something using your hard-earned money, right, you must understand what makes this laptop, what makes this computer different, what makes this company different. Because if you invest in a business where they are selling a commodity product, then most likely, right, you will lose money. Yeah. Then, of course, the management is important, because I still remember there's one point in time where I read somewhere that somebody asked Warren Buffett, if you want to invest in a company, will you prefer to invest in a company that is good, but the management is so-so, versus a company is bad, but the management is extremely good? So out of the two, Warren Buffett state very clearly, right, that he will choose a good company. It's like choosing a very good horse. But if it's being ride by a mediocre jockey, I think the horse can still do very well. But imagine if the jockey is really the number one in the world and then is riding on a broken horse. Yeah, I don't think the horse can go very far. So remember, the key thing is you want a good business that's growing, and of course, you want to buy at a cheap price. So now the question is, how do you know? You have to look at the financials and know all investment is always a matter of lowering the risk, and so that we can increase the return. And then we end up with the valuation. So I'm just going to pause here for a short while in the next couple of seconds, just to let you know that investing requires a sequence, a framework. So in other words, if right now you're sitting on some companies and then you realize that you do not know what to do, because the moment you press buy, the share price drop, and you know nothing about financial, you shouldn't be doing stock picking. Okay, don't get angry with me, right? But let's come to here. But at least today's webinar gives you some form of framework, so that you can check off. So number one, remember, before you buy anything, you have to know what is the thing that you are buying. So let's start with Paute Group. Now, just to let you know that Paute Group is the third largest. They're not the largest. They're not the second largest. They're the third largest home builders. So by looking at some of the pictures at the right, you can see, the homes that you see is very different from the apartments in Singapore. It's like bungalow in Singapore or semi-detached in Singapore. So the company is in US and has been established since 1956. So it's pretty old, right? Remember, it's a cyclical company and it's a consumer. So business to consumer, industry, home building, and the ticker symbol is PHM, as listed in one of the company in S&P 500. But to get you more acquainted with a company, I think it's better for you to watch a video than me trying to describe what it is. So I will just need my colleague's help with before my colleague play the video. I need to toggle to one place. I just need my colleague's help to play the video. So ladies and gentlemen, welcome back. Let me make sure that I switch on my video. And then I share screen. Every single day there's always something to learn. We are using this software that is slightly different from Zoom. So I'm back to full screen. So I think from the video you will have some idea about what we mean by home builder. So actually they bought land and built houses on it. Now, so if you look at this slide over here, there are 4 components. To fully appreciate a company, you cannot just watch a 5 minutes TikTok video, YouTube video, and then you show hand your money. That's really dangerous. So I'm going to break the understanding of Paute Group into 4 parts. So the first thing is we must understand what Paute Group is doing first. Yeah, so what's on their upstream, who supply the materials and whatsoever to Paute Group, and then eventually how they distribute their service. And of course, on both sides, right, we need to understand their indirect competitors as well as direct competitors. Now, it's important for us to know their competitors because how is Paute Group faring in relative to their competitors? Okay, got it, huh? So what the company is all about. Yeah, we're going to follow this framework, value investing framework. What the company is doing, where is this, the type of company, and of course, the future plan. So let's talk about what. You have watched the video, right? So remember, they are the 3rd largest home builder in US, operating in 42 markets as well as 24 states. But if you look at the markets in 42 states, you may not understand, but that's fine, right? The type of houses that they build is shown on the right side. So you can see single family detached home. I think this is equivalent to our bungalow in the Singapore context. And this one, like attached homes. In Singapore context, it's called semi-detached. So you can see they make most money from single family detached. So 86%, and the other one is 40%. And their target audience is pretty wide. I think it's good for them to focus on a wide audience so that they can have a larger market share, right? So first one, they target, for example, a first-time home owners. It's like Singapore's a BTO. And then subsequently, they also target more slightly premium end. And interestingly, they also target the active adult. So in Singapore context, we have an aging population. I think that Singapore is not the only country that's suffering from this. I think US is also going through this phase as well. So I think it's important for them to see aging population as an opportunity. Now, and to cater for these 3 segments, they have different brands. Yeah. So for example, Paute Homes, American West, Dell, Web, Centex, and so on. So these are the famous brand in their industry. Now, it may be not very familiar to you, but in their industry, it's quite a big deal, right? So now the question is, remember we go back to the part where they build homes, which is like a single home, like a bungalow, and our so-called semi-detached. So now the question is, what's the pipeline of income that comes in where Paute Group may form a very good investment, at least from me. Yep. So their business can consist of 3 segments: residential home, financial service is just a very negligible, as well as land sale and other revenue. So their focus is predominantly number 1. Remember, right? They are home builders. So if you look at another diagram, you can see, right? You see, home building takes up a very huge segment, which is 98%. So in summary, they make almost all their money in building homes. Yeah, home builder. And the income statement is pretty recent, financial year 2023. And their net margin is 16.2%. 16.2%, that means every $100 of revenue that they make, they collect about $16. Pretty okay in their industry. Later, we'll compare with other companies. Now, so where is their geographical footprint? So remember, again, 3rd largest home builder. And their target area is actually here. You can see Florida, West, Southeast, Midwest, Texas. For me, maybe not so familiar, but at least from this diagram, you can see all the shaded region they are in, right? So what does it mean? It simply means that the unshaded region are their possible market opportunity for them to expand. Yeah, if this whole area is all saturated, that means there's a little growth. So I think it's good that there's still some gray areas, gray shaded areas for them to venture into. So what type of companies are they? Yeah, ultimately, we want our money to grow fast so that we can retire much earlier. And in order to do that, there are predominantly 3 types of company. One is fast, one is medium, and one is slow growth. Now, each category of such companies has their pros and cons. For me, right, my preference, I'm not very sure about you. For me, in my portfolio, I only have fast growth company and medium growth company. Slow is a bit too slow for me. So I focus on fast growth. So now the question is, what is a fast growth? Now, if you look at the company's earnings, if you buy one share of the company, you can see the line is going up. So from the angle of value investing methodology, if there's an uptrend, that would be good. But now the question is, how fast is this uptrend? So what we do is we use our in-house calculator, we plug in the numbers. So in ours for the past 10 years, on each of this year, right? Each year, the company has been growing at an average about 28%. Yeah, 28%. To me, it's quite fast. And of course, if we use super value investors categorization by the name called Peter Lynch. He classified, right, that the company is a fast growth if their past EPS growth rate exceed 20%, in which this case this is. Yeah, but bear in mind that no company is perfect. If you invest in a fast growth company, they tend to pay very little dividend because they already give you A. You can't expect to have A, B, and C. Yeah. So I think in my life, I want to focus on capital gain and minimal dividend. Yeah. So which is why when you look at this slide, you realize that their dividend yield is not so high. For a typical company, the average dividend yield is about 3%. That's for medium growth, right? But if the fast growth, it tends to be lesser than 3. So in this case, I think it's justifiable. Yeah, it grows at, just now I was saying, it grows at 20%. And when they need to grow the business, right, they need money. Yeah, so when they need money, they have to pay you something less, which is why the dividend yield is 0.69%. I think justifiable. But the good thing is if you look at the absolute amount of dividend that has been paying out since year 2020, do you notice that the number has been like increasing slightly from 0.12, 14, 15, 16, 20? And they can pay out higher dividend because the company is making more and more money. Yeah, so usually when a company makes more and more money and they are generous, right, to pay shareholders more and more, we call such companies shareholder friendly. I mean, versus company where they make a lot of money and then they don't give you money. I mean, for example, if you work in a business where your boss makes a lot of money, buy a Lamborghini, right, and then tell that the company don't make money, I think, not so friendly. So we want to focus on shareholder friendly companies. Yeah. So if you look at the upstream, how does Paute Group really function and make money? Now, so step number one, in order to build house, of course, they need to build house on the land. And to do that, they have to buy the land first, develop the land. Then after that, of course, they have a sales process to sell the house. And eventually, they will build the house based on whatever order that they receive from the customer. Singapore, we call BTO. Yeah, so build to order. And then, of course, at the end of the day, they hand over. Now, bearing in mind that when they hand over, not only they hand over the house, they hand over the land that comes with it. So in other words, it's like a freehold, rather than 99 years in the context of Singapore. So in detail, these are the process. I wouldn't go into the line by line, but eventually, remember, identify good location, buy land, yeah, do some technical things, the site planning, whether can I do this, can I do that, and then eventually they build. And of course, when they build, they have to start their sales process, right? In which we're going to talk about right now. So what's their distribution channel? Predominantly has two broad categories. The first category is a website, social media, like a typical B2C, a business to consumer business. And they also have a dedicated sales team, right, to sell their houses. Yeah. So from a customer perspective, of course, when they go and look for Paute Group, their salesman, they have to decide what to do. Salesman or sales consultant will put them through a certain process and then eventually, of course, build home and then they take over the home. Yeah. So remember, build the houses on order. There are some details over here. Remember, they will only start home construction when a purchase agreement is signed. Because if they start building before it's signed and then the customer back out, that is quite dangerous. Now, it seems like a common sense thing, but in the world of business, we always want everything to be black and white, all signed properly, so that when you start building, you know that the deal will be 100% confirmed. Then, of course, eventually handing over. Remember, completed homes and title deeds, right, which is the land, will be passed to the homeowner. Then, of course, once you pass it to them, is for the homeowner to really maintain. Now, so for the past maybe 10 minutes plus, I described about basically what Paute Group is doing. But eventually, remember, when we buy the shares of the business, we are buying to the company's future. So now the question is, in order for the companies to have a future, you really need to hear from the management, hey, what are your future plans? Because if you buy a company where they have no future plans, that means the company has no future. So it's important for us to understand how the management is going to grow the business so that when we pass the money to them, our money grows. So if you look at the future plans over here, which is really important, even though I make it sound like not so important, there are three ways that they're going to grow the business so that our money will grow. Briefly, they want to drive superior home building profitability. Sounds quite generic. I'll provide details later on. Increase use on land and eventually expansion into new markets. So let's look at number one. What do you mean by superior home building profitability? Some detail, right? Now, I'm not like a guru in underwriting process, but I guess what Paute Group is trying to say is during the process of trying to sell their home, there needs to be a very disciplined process. And remember, they focus on build to order first. You sign the agreement, then we build. And interestingly, for the past recent years, the Paute Group also focused on this group of houses called speculative houses. When we say speculative houses, not really the house is speculative, but in the context of home building. What do we mean by speculative houses? So if you look at the bottom, I wrote a short definition. Speculative, that means they build the house first. Yeah, so remember BTO is they haven't built, they take the order first. So speculative is they already built a house, and then of course they have their own internal risk assessment, so that when customer come, they don't have to wait directly, I can sell you this home. So I guess when they say speculative, it's because they build the houses first rather than they sign the agreement first. Yeah. And of course, the second part is really increased use of land option. Now, so what do you mean by this? If you look at the red text over here, it says that they're going to defer acquiring land until PHM exercise the option to purchase. Yeah. So if you look at this histogram over here, right, you realize that there are two colors. One is the blue one. Blue one, that means they already own the land. Yeah. The other one is only when you want to buy the house, then I go and buy the land. Yeah. So I think instead of 100% all owned, they split into almost like a 50-50, to reduce their risk. Yeah. So to me, I think there's some intelligence in it. Yeah. Then if you look at this article, which is dated 27th of December 2013, where it's published by Yahoo Finance, you wrote something good about it, but let's look at it here. Paute Group spikes 127. They are referring to the share price. So what awaits in 2014? So if you look at the detail, right? So remember, majority of Paute Groups are so on the BTO, okay? And only recent years they start to focus on, can you see, build speculative homes in most of the communities, which allows it to compete more effectively with existing home. Now, when I read this slide, then I could sort of understand the reason why they want a speculative home, because they are not only competing with other home builders, which is building brand new houses, but they are also competing with second-hand houses. Yeah, so it makes some sense. So I guess it's really the management has to be very smart and intelligent to guess the proportion of how should I say, built to order houses versus speculative houses. And here it talks about last year, right, 2013, the increase in closing is mainly due to continued consumer demand. I think that's a good sign for investor, especially for quick move-in speculative buyers. Okay, so it witnessed a 16% improvement new orders in same period due to this tailwind. So here it seems like the entire macro environment benefits Paute Group, but bearing in mind that they're in a cyclical, so that maybe some years is good, some years that's not good. Yeah, so now the question is third one, when they say they want to grow, hey, I want to grow so that our money will grow, right? Where are they expanding? Predominantly two new markets. One is called Salt Lake City, in Utah, and the other one is Greenville. Now, Salt Lake City is here, though. Remember, it's a city, not the entire Utah or Utah. And then Greenville, South Carolina, you can see is over here. Yeah, so they're expanding into these two. Let's see. In other words, if for myself, when I hold the stocks of the business, I have to monitor, does the management do what they say, so that we know that the management is not only capable, but they deliver what they promise. So this is very important in investing. So what the company is all about. So let's just pause here for a couple of seconds. Now, in case you're watching this, you see, Kayden in 10 minutes talk about what the company is all about. But if I pass this homework to you, if I'm the teacher, the student, I pass this homework to you, it may take you quite some time, Yeah. But your time spent on trying to figure out what is it may be shortened, provided you have taken some proper course, such as our value investing program or so on. But you have no idea about financial statements. This is the kind of detail, right? Everybody should really focus on. Yeah, this is the expectation of yourself before you put your hard money into any stocks. So you understand, Okay, but what's the next step, right? Now, the next step is when you understand our business, then you need to drill further in detail into understanding whether is there something special about the company. And the reason why we need something special about the company is because if there's something special about the business, then the profit of the business is predictable versus something that you don't really understand, or versus some companies that doesn't have any form of economic mode. Yeah. So now the question is, what is an economic mode? Now, economic mode is just a big word for three words, which stands for durable. So durable is a key word, competitive advantage. So let me give an example of some companies where they used to have competitive advantage, but it's no longer durable. For example, Nokia, they used to be the number one, right? Yeah, then right now it's overtaken by Apple, Samsung, and so on. And then, for example, Kodak. In the early days, when I was much younger, it was Kodak and Fuji. So they used to have a competitive advantage, but unfortunately, they are no longer around. Yeah, so they are no longer durable. So it's important for us to find a business that has a competitive advantage and is highly durable, so that at night when we sleep, it works for us. Huh? Now, so let me just share with you some qualitative a criteria to show that they have some form of economic mode. Yeah, because they are the third largest, that's why they have some form of economies of scale. Yeah, and because of that, of course, the borrowing cost will be lower, and then they are some big boys, right? Because top three, they can buy huge numbers of land. And of course, a big company, I think people like to work in big companies versus a small company. And because they are big, they can have some form of product diversification. And remember, just now I showed you a list of brands, a Paute Group right in the middle with all the brands aside. And because they have many brands, so I think it's easily trusted by consumers, by home buyers. And they've been around for 70 years. That's pretty long. And in order for a company to really build homes, you can't just build, right? You need a regulatory approval, some license to build. So these are some competitive advantage where they want to increase the barrier entry to prevent other companies from coming in. But having said that, regardless of whatever you say, there's always some competitor. So I think it's not really about whether are they the only one, but rather they are one of the few, but are they still competing well? Later we talk about this. So this is the qualitative part, but anybody can argue anything that's qualitative. But let's look at the numbers, because numbers don't lie and numbers tell the truth. Yeah, so as a value investor, right, or rather if you have never invested before, this is a very good lecture, because you learn something new called ROIC versus WACC. Now, in order for us to conclude that a company really has an economic mode, we look at two numbers: return on invested capital, weighted average cost of capital. Yeah, so these are definitions here, but I'll just skip it. Now, in summary, there are two things we look at. First, right, is ROIC must be bigger than WACC as the years go by. So you can see over here, the difference in 2019 is 7.64%. And do you notice that as the years go by, it sort of widens? So in other words, the difference, as long as this difference widens over time, the economic mode widens. So this one brings me some form of assurance. Now, the second good to have criteria is we want the ROIC to be bigger than 15%. Initially, it wasn't, but over time, it becomes bigger. So I think numbers tell the truth, and numbers makes me feel good. Yeah, but in any industry, there's always a competitor. For example, Coke has a competitor, Pepsi. Apple has a competitor, Samsung. But how are they dealing with the competitors, both for direct and indirect? Now, if they're able to compete, then it makes investors like myself feel a bit better, right? Now, these are the list of direct competitors. Dr. Horton is one of the companies that's invested by Berkshire, which is Warren Buffett's company, Lanner, NVR, and so on. But let's look at the indirect competitors first. Yeah, so sometimes in life, for example, you can say that the direct competitor of Coke is Pepsi, but the indirect competitor, it can be water, right? Yeah, because if I drink water, then I don't drink Coke. Okay, so does it make sense? And the indirect competitor of Netflix can be TikTok. Yeah, because at any one time, my eye can only see one screen. So either I see Netflix or TikTok. So you can see these are the indirect competitors. I think the homeless is also indirect competitors because nobody to buy homes, right? Yeah, but let's look at the direct competitors so that to give, at least for me, some assurance. Now, so if you look at here, it's a lot of numbers, but let me just go through this very quickly. So these are their closest competitors. Yeah, so I put Dr. Horton first in terms of the revenue. Now here is 35,000, but it's actually not 35,000 because at the back there I see 6 zeros. Yeah, so in summary, it's actually 35 billion revenue. Yeah, so I put it in a decreasing order. And what I did was I put some fundamental criteria such as gross margin, operating margin, net margin, ROE, ROA, and so on. So what I do is out of this list, as long as they are top 3, I will highlight the cell. So for example, the difference between ROIC and WACC, top 3, I'll highlight. Yeah, so this is quite a crude instrument, but it gives us feel, right, quantitatively, is the company better than other competitors. So if I count the number of yellow cells, you may realize that Powday Group is number 6. Yeah, versus Warren Buffett's one is number 2. Okay, so good consolation. Yeah, it's the best of the best, at least from this table. So I think even though there's competition, there's some form of economic mode. Yeah. So I think as of now, we know more of the business. The company seems to be a good horse, but we are justified with more numbers. But let's look at the jockey. Is the jockey a good jockey? So ideally, we want to have a good company that's ride by a good jockey. Now, the current CEO's name is called Ryan Marshall, who is the president and CEO. He has been a CEO of Powday Group since 2016. And then, of course, 13 years in PHM involving all this duty. There's a lot of details over here. But at the end of the day, we want to know the performance when this jockey is riding the horse. So if you look at the ownership, yeah, let me just look at here. Now, out of the 100% of Powday Group, right, majority of the business is owned by financial institution companies, so 86%. So out of this 100%, about 3.38% are owned by insider. So let me just blow up in this 3.38, right? So this whole circle over here represents 3.38%, and you can see it's owned by all these people or various posts in Powday Group. But you may notice that out of 3.38, Mr. Ryan Marshall, who is the CEO, owns the most. To me, I think it's important rather than he owns nothing, right? Because if he has a skin in the game, I don't think he want the company to fail. Because if the company share price go up, I mean, he benefit from it. That includes salary, bonus, and so on. Yeah. So let's see how is the performance of this company called Mr. Ryan Marshall. So remember, he started to be the CEO of Powday Group in 2016. And if you look at the revenue, yeah, compounded annual growth rate, that means the yearly growth is about 13%. But remember, revenue is vanity, profit is sanity. So if you look at the profit, I think not bad. The CAGR on average, every single year is about 27%. So I feel good if I put the money in a company where the management can grow the profit at this rate. So 1, 2, 3, done. But let's give ourselves more assurance by looking at the numbers, at least based on the past, right? Financials. Yeah. So is the company profitable? Let's look at revenue. Now, revenue, of course, most of you understand revenue. So for revenue, we want it to be an uptrend. Okay, so it's uptrend. But bear in mind that revenue is vanity. So let's look at the profit. Profit, there are 2 types. There are a couple of types. So one type of profit is called gross profit, where you take revenue minus the direct cost. Yeah. So what we want to see in all the charts that relate to profitability is an uptrend. Okay, so it's uptrend. And the final profit, which is the net income, is also uptrend. And then, of course, if the profit is uptrend, you divide it by the total number of shares, we end up with earnings per share. So everything is uptrend from the angle of value investing. It's a good horse, but we want more evidence, right? So let's look at the net margin. So what does net margin mean? Now, if net margin is 8.15%, it simply means that for every $100 of revenue that a company makes, deducting all expenses, you end up with $8.50. Now, if you look at this number alone, you may not know whether it's good or bad, but if you look at it over time, you realize that the net margin has doubled. Yeah, so the company must be doing something right. And if you look at all other competitors, including Buffett's Dr. Horton, you may notice that the net margin is one of the highest. The highest is actually this NBR, but it's pretty competitive. Both are about 16+%. Yeah, so it looks good, but bear in mind that in a cyclical, if it's good, it's good. It's bad, it will be bad. And if you compare it with a sector and an industry. Now, let me just explain what sector. In the entire US stock market, there are 11 sectors. One sector has many industries. So within the sector itself, it belongs to really one of the best of the best. The bar is on the right. And then within the industry itself is also on the right side. On the right side is a good sign. So margin is really high, right? And of course, sometimes people can manipulate revenue and profit and so on. So it's quite difficult to manipulate cash flow. So let's look at their cash flow from operations. So short form, I just put CFO. So we want it to be uptrend and minimally stable. So uptrend is good. Free cash flow means if I take cash flow from operation minus their investment into capital expenditure, is also uptrend, which is also good. And Warren Buffett has his own criteria, and this criteria is called owner's earnings. So what does it mean? It simply means that you take cash flow from operation minus the expenditure in trying to maintain those equipment that produces cash flow. Now, in summary, right, we want it minimally to be stable. So if you look at the beginning, not so good, but the last few years is really uptrend, following the trend of the cash flow from operation as well as free cash flow. So from the angle of value investing, is still a good horse. But let's look at the efficiency of the companies making money. So we look at two terms. One is called ROE and one is called ROA. Now, in simple words, what do you mean by ROE? Now, ROE here is 31%. So what does it mean? It simply means that if the company put in a capital of $100, they actually have $31 of profit. Well, that's pretty high because our bare minimum is 15. Yeah. So in this case, it's a pass. Yeah. And ROA, it simply means that if ROA is 18%, what does it mean? It simply means that if they invested $100 in tangible assets, these assets could produce more than $7 for them. And in this case, you look at here, right, it's $18. Yeah, so both passes the stringent criteria of value investing. Yeah, so the last thing is to look at the debt. Even though the company is making money, the company can still be a bad horse if it has too much debt. So if you look at this, the debt is 0.25, and we look at this criteria called debt to equity. Yeah, I mean, what do you mean by debt to equity? Now, we want the debt to equity to be less than 0.5 or rather 50%. Now, 50% means 50 divided by 100. Yeah, it also simply means that if the company put in a capital of $100, they can only borrow less than $50. Yeah, anything more than $50 is considered high debt. Yeah, why high debt is dangerous? Because high debt incur interest. And touch wood, because the company is in a cyclical business, if something didn't go well, they have huge debt, they have to pay interest, the company may go bankrupt. Yeah, it's something like you make, let's say you make 10K per month, but if your debt is the interest payment is more than 10K, you may go broke. Yeah, so we want low debt. In this case, manageable debt. Yeah, so good horse. Yeah. So let's look at the balance sheet. Now, balance sheet in simple terms records down what the company owns and what the company owes. Now, what the company owns are called assets. So in this case, we just focus on the assets. If you look at the assets, right, the cash represents 14.44%, and the inventory, which are all the parts that need to come in to build a house, is 73. So I mean, years ago when I first looked at this, I was a bit worried because out of 100% of the assets, their cash is so little, it's about 14%. Yeah, but inventory is so much. Yeah, what if something happened? They don't have cash. Yeah. Then what I did was I compared with Dr. Horton, because sometimes such a percentage may be very particular in that industry. So if you look at Dr. Horton, do you realize that the cash is even lesser than the one in Paute Group, so 11%. So inventory is about 70%. So I realized that I think it could be a industry norm. Yeah, and of course I can always look at all other companies. Yeah, but to save time, right, I just focus on two. So I guess it's just an industry norm. Then to give myself more assurance, even though the cash is a bit, seems to be quite little, 14%, I look at another criteria called cash per share. So what does it mean? The cash per share means if let's say the share price is $100, and right now the cash per share is about $10. So what does it mean? It simply means that if I buy one share of Paute Group, I have to cough out $100, right? And let's say this $100 is, let's say, wrapped up in a box, and the box is a share. So I pay someone $100 in exchange for one share, which is represented by the box. And when I open up the box, I see $10 inside. So effectively, I'm using $90 to buy the stock. Yeah, so this is what it means by cash per share. But of course, by looking at one number, it doesn't mean anything. But the key thing is to look at the trend. Yeah, so I think the cash per share is increasing. To me, it's a good sign versus the other way around. Yeah, so again, one more number to justify that it's a good horse. So what have we done so far? What the company is all about? The company has some form of a durable competitive advantage, right? Justified by numbers, quantitative. Seems to be a good jockey. Number looks good, but nothing is perfect. Nothing is perfect. Yeah. So let's look at their potential risks before we talk about valuation. Now, if you look at the potential risks, just to let you know that based on history, right, the U.S. housing market is always cyclical, and there are different phases. So in summary, they have their good days. In summary, they have their bad days. Yeah, but the company has been around for quite a while, and they have been doing quite well. Yeah. So at least based on historical data, it seems that the company can withstand this cyclical. But this is a risk. This is a risk. And of course, other things such as COVID, labor shortage, construction material costs go up. There's a list of things. And then remember, right, the recent year, as in 2022, it spiked up, and then 2013 it sort of flattened off. Is because high housing demand. So I suspect that 2022 it could be at this expansion phase, and after that it slows down. Yeah. Then also high inflationary environment. For example, in a Singapore context, you realize the interest rate has gone up. Yeah. So if interest rate has gone up, buying homes, paying the interest could be an issue. Yeah. So at this stage, let me do a very quick wrap up. Now remember, Paute Group appears because me and our team, right, spend hours trying to screen for a company. But if you're a person doing it, it'll be very difficult for you because you have no idea where to start. Yeah. So if I do it, I think things are much easier. Now the next one, even if you find it or somebody give you a stock tip, how do you know whether it is good or bad? There is no other way out but to understand financial statement. Now, if you're watching this and then you maybe before you watch this, you're not from finance background, you have no idea what's balance sheet, profit and loss, cash flow statement. My take is you shouldn't be buying stock. Okay, how should I, so don't get angry again, right? So I think it's important that there is no other way out but to understand a financial statement, which is what we are trying to do in this webinar. Yeah, even though I speak a bit fast. So by understanding numbers, financial statement, then we have the capacity to determine whether the company is good or bad. And of course, at the end of the day, we want to know the entry and exit point, which I'm going to talk about it in the next couple of seconds, right? Yeah. So valuation is actually a process where we want to identify how much one stock is worth so that we know when's the entry point and when is the exit point. Now, remember, right, if you do not know how much one stock is worth, again, you shouldn't be buying stock. Yeah, or you already bought the stock, but you do not know how much the stock is worth, you will never know when to sell. Yeah, so there are many ways, there are tons of ways to do valuation for any company, but we're going to use a simpler way, and we call it, actually it's not we call it, the method is actually discounted cash flow. So discounted cash flow. Now, discounted cash flow, as the name implies, with this cash right in the middle, there are various forms, right? Discounted cash flow can be earnings-based. That means you use earnings to calculate intrinsic value. You can use cash flow from operation to calculate intrinsic value. You can use free cash flow to calculate intrinsic value. So you realize that it requires knowledge. So to make things simple, let me just use one. Yeah, not enough time. So let me focus on using an earnings-based discounted cash flow. Yeah. So this is Paute Group. So what we did was we plugged in their earnings per share from the bottom, and then we put it at the top, and their growth rate is 28%. And then because the valuation is always intelligent estimate, because there's no guarantee to anything. Yeah. So we plugged in the necessary numbers. Yeah. So what does it mean? It simply means that for the first 10 years of the business after you have purchased it, you assume that the company will grow at 5% every single year for 10 years, or grow at 7% every single year, or grow at 8% every single year. And then subsequent 10 years, you will only grow at 2%. Yeah. And then if you work backwards, and then you give a 30% buffer, right? So how much is the company worth? Yeah. So the company is worth this amount. Maybe if I put it a diagram, it will be easier, right? So the intrinsic value can range from $99 to $121, depending on whether you're very conservative or highly optimistic. But regardless of the number, right, you just need to look at the share price right now. Now, if the share price is below the intrinsic value, it's considered cheap, or rather the technical term is called undervalue, because it's under the intrinsic value. So in other words, from value investing perspective, it's a buy. Now, if it hovers around the intrinsic value, we call it a fair value. Fair value is also a buy because from Warren Buffett's perspective, he would rather buy a wonderful company at fair value. But of course, if it's above the intrinsic value, right, then it's a hold. It's a hold. Or if you're holding the company right now, you may consider selling, right? This is just for education purpose. So here we say it's a sell because it's overvalued. Yeah, overvalued. So let's do a quick recap. I have to speak really fast because I promise it's an hour. So you realize that even though it's an hour, we spend really many hours trying to share with you the solution. So what have we done? We have searched for you, and we have found a company called Paute Group. We evaluate, at least from the angle of value investing criteria, it's a good horse, management is a good jockey, and we have given a range of intrinsic value for you, but we have to skip the last part because not enough time. Otherwise, we can tell you how to build a portfolio. Maybe next time. Yeah. So just to let you know that Paute Group is one of the many companies that, at least for me, I have in my database because one portion of my job, other than running VIA or Value Investing Academy, is really to have a database of company. Yeah. So I know I cannot do this forever. At some point in time, I have to be a 100% investor rather than running a company and then invest at the same time. So what happened is, I think it's by chance, right? In March 2020, pandemic came, and then myself together with quite a number of our experienced graduates, we actually formed a team to collect companies, to screen companies. Remember, let me go back to here. We search companies, evaluate company is good or not, determine the intrinsic value, and so on. So we have been doing this project for 4 years, because March 2020 and right now 2024 is almost 4 years and beyond, right? So what we did was we kept all the database. It's like in a secret vault, and we call it VIA Atlas. Yeah, and the project that me and the team of people who are doing is called Project US Case Study. And our dream is to, have these value companies at our fingertips. Now, let me share with you what do I mean by fingertips. Now, this is a quick sharing of some of our authors, and we even have people like, let's say, Betty Fan over here, who is a PhD holder. These are just the few. In fact, our scope is a bit bigger, right? The number of authors are a bit bigger. Now, so what do we mean by having such company in the database at your fingertips? Now, this is a desktop version. This is a desktop version, right? So let's say today, right now, at this moment, you have access to our database, or our secret vault. So what you need to do is, of course, you just need to click login, and then your name. Let's say your name is Caden. So we have a database of US company as well as a SG company. SG, that means Singapore listed companies. And let's focus on US companies for now. Yeah. Then, of course, when you click on the US case study, right, there are many other tools, but the most important is this button over here. Now, I'm just going to slow down. Do you see this one-page directory? Now, it's like a telephone directory, right? But in our case, it's a directory of our database. Let me show you how it looks like. Amazing, huh? Now, let me just put this aside. So you can see here that there's a list. Actually, the list is quite long. Yeah. Now, but let me just show you two companies, ticker symbol TPH and SNDR. So here we will categorize this company based on their industry and the point of time, what's the current share price today, and then we even calculate the lower range of intrinsic value and a higher range of intrinsic value. Yeah. So what does it mean? It simply means that, for example, for this Snyder, right, the current price is 26. Yeah, and this 26 is higher than 10. That's why it's overvalued. And this 26 is also higher than 25. That's why it's overvalued. Yeah. So overvalued, that means what? That means since the day that we introduced SNDR, the company has done quite well. That's why the share price has become overvalued. Yeah. Of course, from a value investing perspective, you cannot really buy. So let's say you already have access to a database. You click on it, and then there are many tabs on the left. You can have a quick summary on the companies. For example, company profile. You can read. It's like a 1-minute read. You can also download this executive report, maybe about 2 minutes read. PDF form, you can download into your laptop. Can you see we do all the work for our users? Circle of competence, economic mode, all the graph, we have the valuation and so on. Yeah. And if you're interested in this company, you can always click on the slides. Yeah. Click on the slide. So in other words, it's like having the slides that I'm talking about right now. You can download into your PC. And of course, you can also listen to someone else. I mean, other than me, one of our authors to explain to you. Yeah. And the duration is about the duration of this webinar. Yeah. So in other words, you can really understand the company versus watching Netflix now. And the best part is since January 2024, we have launched our app called VIA Atlas. Now, if you're an Apple person, right, you can download via the Apple Store, Google person, Google Play. Yeah. And by the way, you can have immediate access as you're watching this. Yeah. So in other words, right, the intention of our database is actually to solve all these 4 major problems for you. So now the question is, in the next maybe 3 minutes, now how can you access this database? So how can we, VIA Atlas or VIA, help you? So just take note. Let's imagine that today is the 1st of January, and you decide to be one of our member, one of our user, 1st of January. So what we do is every single month, we will upload 2 companies. It could be a new company. It could be a company that we have previously uploaded, but we have done some revision, and we upload. So 1 month will be 2. And the most precious part, so this is one first quarter. The most precious part, right, is at the last week of every quarter. We always do organize a live online like webinar like this. But the other one is better because we do it via Zoom, so there's interaction, huh? And during that time, right, there'll be 2 authors who will present these 2 companies to you live. And the best part is, if you happen to be one of our graduates, I will share with you, right, the 6 to 8 selling option strategy where we print instant money. I mean, you know what I'm talking about, huh? Yeah, and then we repeat this. So it's a 1-year program. You have 1 year access. So that's into the future. But the most important thing is, how about the database that you and the team has already accumulated? Just to let you know that right now, immediate, our database has 75 companies. Okay, huh? Out of these 75 companies, about 70% are still undervalued. Yeah, very good reference for you. It's done for you. And of course, you have all the summary report. And the best part is, every time when we upload new case study, not only you receive notification via the app, we will also send you email reminders as well as a messaging. Yeah, so that you alert, huh? Yeah. So if I could paraphrase it, so remember, 1 month, 2 case. In this case, so 24 case study moving forward. Yeah. These 2 are the live online gathering. Yeah. And the last one are all the summaries that you can download in 1 minute to 3 minute read. So if you compile all this, I purposely put the value by the side. Yeah, because your time is not free. Your time is precious. Yeah. Yeah. So the best part is you can have instant access to all this database today. Yeah. So now the question is, in order for you to access this database, there is a small little investment. But to do that, I think it's important for me to describe to you what is the value. Now, if I add up all these numbers on the right, the value is $16,000 US. Yeah. So how do you gauge this, right? You have to ask yourself 1 year of your precious time. Yeah. And your life saving, is it worth 16,000? Yeah, I'm quite sure your salary is more than 16,000, so your time is worth more than 16,000. I'm quite sure your savings, especially more mature adults, your savings is more than 16,000. Yeah, I think it's important for us to protect our money, right? By putting in a small amount of money to learn about investing, especially via real life case study. Now, so if you are interested in our case study, just to let you know that we want to give you a little surprise, because you will set aside time to listen to this webinar, right? Now, our original subscription fee is $1,776 per year. Now, but for people like you who have set aside time to watch this, we will give a 50% discount. So if I take this number, 1,776 divided by 2 is 888 per year, and I divide by 12 is about $74 per month. It's on a yearly basis rather than monthly basis, but I divide to let you have a feel, right? Yeah, and if you continue a subscription for the 2nd year onwards, the fee will further reduce by 17%. Nobody will reduce when you become a good customer except us. Yeah. So yeah, remember, today's bonus is more than 70 case studies, and more than 70% are still undervalued. And if you are really interested, my colleague would just let my colleague post the I think the banner by the side, right, as I speak. Now, so yeah, so once the banner pops up, you may see that the number is 816 instead of 888, because you set aside time, we want to give you some form of discount. Now, bearing in mind that we want to reward action takers, which is why the offer is only valid for the next 24 hours. So I think when you click on it, now you can click on it right now, there should be some timer, 24 hours. Yeah, so that after 24 hours, it's up. So don't quarrel with us. Don't quarrel with us. So as I speak, you can just click on the link. Yeah, but I think to give you a more assurance that having subscribed and having access to our database is good, right? It's important for me to share with you one video. So I let my colleague just stand by. Okay, anytime ready, please play the video for Julie Lok. Thank you.
My subscription fee, I get it back within 1 to 2 clicks. Okay, I'm Julie. I'm from VIA Graduate Batch 31, and I work in a healthcare company. The reason why I started to subscribe to the US case studies is because of time. I realized that we need a lot of time in terms of doing the research, the filter, the analysis. Sometimes it's very difficult and very tricky. And it's not just as simple as 1, 2, 3. If we have a team who can actually do a good job in doing all these things and monitoring them, why not? It's less than a proper like 10-course dinner or a dinner that me and my friend are going later. You know, it's like or lunch or high tea or whatever, and you have a peace of mind. Like you know that these are the value companies, and you know that this can be part of your portfolio. US case studies is not just about presenting the 1 to 24 studies, 2 studies a month, and then they will forget about it. If you realize that they actually go back to reanalyze some of the case studies that they have picked up before, and then review again, is the fundamentals still there? Are they still earning? Do they still have good management? What have they done for the past year? Have they met the criteria or the promise that they say that they're going to meet? Now that I've found out this value investing part can be part of my portfolio, right? Let's say 25%. I have the other 75% that I need to look into. But I know value investing is important. It's the fundamental, it's the base, right? But once I found out this time that I don't need to do or search the world, for the companies, which I know that a very dedicated and very good team will do that, I can actually use my time for other things. Other than venturing into other types of instruments and investing, I also have more time for my family. I do not want to sit there and search for things rather than sitting down and looking at, what is the company to invest tonight. ROI that I gain from value investing and plus CFOS and the US case studies is about 15 to 20% per year. And it's like 1 to 2% per month. After subscribing to the US case studies, it's very structured. These are the companies that has been picked up and searched and researched and analyzed by a dedicated team with all the knowledge that they have to make sure that it's really a value company. So after that, it took me only about like maybe half an hour to 1 hour. So these are all the benefits that I have because I don't have to worry. It's like a peace of mind. I don't have to worry about is the company good or not. I know that the US case studies, all the company will be value company. But whether I want to invest in them because it's value company is my due diligence.
Okay, ladies and gentlemen, welcome back. Let me just put the screen up. Just take note, the lady who was speaking just now, right? Her name is called Julie. Right now, you should be able to see the full screen. Now, just a quick recap. Julie has been a user or subscriber for our US case study since the very beginning of time, which is in April 2020, because she finds extremely helpful to her, save a lot of time, which is why she's still our US case study subscriber today. So let's do a very quick recap. What are the things that we can be of help as a company? So it's like we got your back. You're standing on top of our shoulders. So remember, moving forward, right? Every single month we'll deliver to you 2 companies. They could be new, it could be a mixture of new, it could be a mixture of some companies that we have reviewed. And then overall 2 times 12 will be 24 companies. And then of course, on the end of every quarter, we meet online, live, because some of you may be staying overseas in Malaysia and so on. So don't worry, you can still subscribe. And then there'll be 2 authors who will be presenting to you a case study. You can have a interaction, chit chat with the authors about how he discovered the company and so on. So you can do Q&A. But the most precious for our quarterly meeting, whole Singapore, we are the only one, is our share with our subscribers. What are the companies that I'm selling options? Specific company, what's the strike price, and what is the expiration date as a learning experience. Then, of course, in our VALS, we also have all the summaries and so on. So remember, there is a value that's stated on the right side, and I've added the value to be this because I'm quite sure a salary is more than 16. Then you can save time. And then if the income can protect it, I think you can save more than 16K. And of course, today we say we're going to give a discount of 50% 88, But actually, we give a furthermore discount, right, which is actually US 816. And that is provided you click on that offer page, right? Offer page on the right side, you click and then you fill up for next 24 hours. There is a countdown, right? So once it goes up, once it's gone, it's gone. Yeah. So I think once you click on it, you will see a screenshot that looks something like this. Yeah. So it's 816, it's not 88. So of course you fill up all the relevant information and then you just check off, you agree, and then you click subscribe. Now, once you click this, I think almost instantaneous, right? Your inbox, if not in your spam box, right? You can check for the login details. So in other words, once you have this login detail, you can access to our database. There's also 7 days, right? Let me just check. Yeah, that means after you subscribe, within 7 days, if you find that not so useful and so on, you can always have a 100% refund. Yeah, so it's a 7 days risk free. So of course, after 7 days, there's no more refund. Then you have to wait for 1 year. But anyway, you just hear Julie, and later on there'll be more other subscribers. They'll share with you their experience. Yeah. So before I end the session, what I'm going to do is I'll need my colleague to play 3 more videos. Yeah. And then as the videos are playing, it's actually to give you some time for you to question, because we have a team of people over here. You can also click, buy you some time to subscribe. And then at the same time, post a question on the chat where my colleagues will handle it. And then after the 3 videos is being played, I'll come back and then I will say goodbye. And that will end the webinar. Yeah. So again, I'll just need my colleague to play the video. Thank you.
Hi everyone, I'm Dominic. I'm a VIA 36 graduate. So I'm in the pharmaceuticals industry. Because of time constraint, then of course with this case study, I believe it has already been, and then because Caden also went through, then and it's also by our own graduates, so everyone wants to make money. So definitely there's have some faith in it. I think I'll spend quite some time, because first you need to, first like I said, you'll go to your circle of competence, then you'll be only pharmaceuticals. Then by the time you really research on it and all right, I think probably, I really think that, I think it will be a lot of time. I mean, I cannot gauge. That's the reason I'm so glad that actually, there's this case study that came up. Maybe I think tops another 15 minutes just to clear up on some parts that I have some doubt. Then I just go and look into it. The company that interests me the most during this case study now, right, is the Carnival Corps. So this one has helped me make quite a lot of premium. That's one thing. And then another thing is because it has never ever came to mind that there's always these cruise stocks. So it has never, I was actually exposed to this. Then now I start looking at all the cruise stocks and actually, oh yeah, because I mean, deep in mind is always airline stocks. So it's always, so somehow I was like, wow, there's this, to me it's like a new wonder. I mean, for myself, and I wouldn't know it and I wouldn't have known it if not for the case study. So to me, it's like I found something, yeah. I have actually had 10% from selling premium for 22 days. And then another one is about another 2% for, I think, for 1 week premium. It's all by selling put. So in fact, also last week, I think I just make maybe, I cannot remember, 2% because it was not exercise. So it's like I've actually didn't really go and keep track, but then yet I know that even I know I'm making money. I felt that this case study is very beneficial to me. Like I say, it helps to expand my exposure. There are companies which I didn't know. Then I was like, oh, okay, actually they're doing this. Then they're very interesting. To be honest, I'm also learning from how they are looking at different point of views. Because let's say if I were to research on my own, then I'll be looking at this. So at the same time, I feel that this case study it opens up to more companies that I may not know, and at the same time learn the different techniques that people are actually looking at, how people are actually doing their analysis, and then I can learn from them. And then most importantly, it saves a lot of time, really a lot of time.
Hi, my name is Serena. I'm also a graduate of BIA program. I'm actually worked for more than 30 years in a trading kind of environment. So with that background, when I entered the 4 days kind of course with Caden, I kind of confirmed that this is also relevant to an individual investor, that we need to have a very good information and knowledge about the business before we put our hard-earned money into the company, right? So that's where I started to do more market research before I invest. After graduate, we continue to meet. We wanted to try on our own, see whether we can do it on our own without paying or not. So we did. So the first month, we met up quite often over the weekend. And you realize what, that after a week or two, individually we start dropping off because we all have a different schedule. So it come to a point that I was thinking, actually, maybe it's time to really get some help. So I think that's when I subscribed for the US case study. When I started to attend the US case study, I feel very fortunate that, the presenter and the person who prepared that case actually already went through all those hard work. And it actually confirmed that all our presenters are very good. And they have done a lot of due diligence to make sure information that they put on the screen for us are actually already vetted and is checked against many different sources. So after the first few cases of going through this process, I felt very comfortable that, I can just use the information and make my investment very quickly. So I did for the first few cases. Then after going through the cross-checking with different sources, I realized that the quality of the presentations are actually quite good. To be honest, after that, subsequently, I do very little. Other than that, I feel very comfortable and confident about the materials actually being prepared with a lot of due diligence and check. So typically, because I was in the oil industry for a number of years, so I don't just pick the presented cases, but also look into those industry that I'm very comfortable with and start investing on those. And I see the US case presentation cases are a good add-on for me on top of my comfort zone kind of industry. So yes, I do more than what the case study presented, but the case study selected company was giving me free tips, right, that I don't have to do anything. These are some of the companies I could also consider the add-on to my portfolio. Okay, but I think after I attended the programs, I calculated that, actually I can get about 5% ROI per month in average for the past few months after I joined the program. So putting number in perspective, right, every 10,000 that you invest, you get $500 per month. So you practically earn back your subscription like less than within your 2 months, which I think is really worth the value of the money. And more important, I think it gave me the true benefit on, a number of things that is really important. The case study actually give you a heads up on when they are presenting what case. So it helps me a lot in scheduling my time on when do I spend the 3 hours to attend, rather than every week I have to spend hours to prepare for it. After joining the couple of months, I really, really like the program. Yeah, and it works out really well for me. If newbies like me getting a ROI for 5% just by following and listening, this is a great program that I could recommend.
Hi, my name is Brett from VIA 36, and I'm here to answer some questions about the US case studies. After attending the 4-day program, I took action and invested in both local and US companies. And I found that US companies was more suitable for me because you can extract passive income on a weekly or monthly basis using CFOS strategy taught by VIA. Therefore, I needed more research and more in-depth analysis of companies that I was going to invest in. After watching the study from VIA, I did my own due diligence and found that all these companies are fundamentally strong. And because my investment horizon is for the long term, I want to invest in companies that are basically have strong fundamentals so that I can use CFOS method to extract passive income on weekly or monthly basis, which I've done so far. Now, if I personally am not comfortable with the nature of the business, I will not invest in that company. But if I find that this particular industry and company has got a lot of growth potential moving forward, I will spend maybe not more than 15 minutes to research into its competitors. Most times, in fact, so far all times, the company presented will be the most fundamentally strong in line with the principles of value investing. So this year-wise, I managed to do 12% in the first 2 months of doing the same, using the same strategy, and it has kept me very safe. In fact, as safe as my previous year, and I'm like super happy with that. So real value-wise, at the end of my second year, my net liquidity was about 85,000. So far, I've managed to obtain, based on that capital, I managed to obtain about 4,000 passive income in January and another 4,000 passive income in February, which is a lot higher than my initial target of 3,000 a month. My suggestion will be to kickstart with something that you can afford. Definitely do not borrow to invest or borrow to buy stocks. Some of the case studies that has been shared, the trade price at that point of time was as low as $2. So if you do your due diligence and you research about the company and you feel comfortable with the nature of the business, you can actually kickstart this journey with capital as low as $200 US. This particular company that has been shared to us, I did my own research and I found that it was good. So this stock has yielded me as high as 20% ROI per annum annualized. And I find that that is a fantastic return for such an affordable stock to start your investment journey with. This method is scalable. It is not trading. It is not speculation. And therefore, it's a very good system because it is suitable for people with a low capital, and it's also suitable for like multi-millionaires with a higher capital. So I love the flexibility of this system.
Ladies and gentlemen, welcome back. So let me just share screen, right, which is this. Yep, you should be able to see the full screen right now, right? Yeah. So again, a very quick recap of our offer. Remember, if you look at the panel on the right, you should be able to see 816. But the most important thing is, remember, 24 companies. So every single month, we deliver 2 companies into your inbox of your VA Atlas, and then backwards, you have access to our database for the past 3+ years, which consists of more than 75 companies. And out of this more than 75 companies, 70% of these 75 companies, I think it's about 50 companies, are still undervalued. And the best part is you can have access to all these database right now, either via your desktop or your mobile. Now, in case you have clicked the subscribe, remember it's 24 hours, and you encounter some issues such as you don't see the login details sent to your mailbox and so on. So remember, just simply email to technical@mindkinesis.com. Then all will be sorted out by our team. We'll respond to you and so on. So, ladies and gentlemen, again, I appreciate your precious 1 hour of your precious time, and I hope to see you in our next US case study inner circle gathering. Yeah, so see you soon. Goodbye.
Good,